All right, folks, here we are on Trading Up. We've got Kieran Davis in the house. If you recognize the face, he's been on the show before. If you recognize the background, then you're doing something special. So, Kieran, welcome back to the show. Can you tell us where you are?
What's going on, Cam? Super excited to be here, man. And I'm out here in Thailand on the island called Koh Phi Phi. Beautiful. You can probably see some of the scenery in the background. Super grateful to be here, man.
Yeah, look, I've been there myself like years ago, a year before the actual tidal wave, actually. So I was quite lucky not to be there that year later, because it was almost a year to date. But now today, you're going to walk through essentially a cheat sheet to Wykoff. So it's going to help anyone that's really stuck with Wykoff or sees Wykoff and turns off to get it quickly. And yeah, do you want to quickly give us like a 20-second thing about what you're going to show, and then we'll jump into the charts?
Yeah, of course. Like when I first got into the markets, I would learn all these different strategies, whether it's trend line, support, resistance, even smart money concepts. And they still couldn't fill in that gap of why I was getting manipulated out of trades before the real move actually occurred. Then I came across Wyckoff, came across all these little, all these different parts, all these different diagrams. It was so confusing. But what I'm going to do today is really simplify in literally 10 minutes or less how you guys can identify Wykoff schematics and be able to trade based on them. So I'm super excited for this, man. And I know everyone's about to have some crazy breakthroughs on their Wykoff journey.
Awesome. Well, let's jump into a price chart and check it out. Folks, if you're looking for the skills to get funded, then the bank level trading strategy from my sponsors, City Traders Imperium, may be the perfect solution for you. Now, get this, trades average 1 to 5 risk to reward with a 40 to 50% win rate. And the strategy combines the best of smart money concepts, wave theory, and Wyckoff theory. Plus, it's been successfully used to pass CTI's evaluation challenge. To find out more, click the link in the description below or the card above, or visit citytradersimperium.com.
So when it comes to Wyckoff, guys, what you have to understand is that the reason we trade Wyckoff is because who we're actually trading against. Right? When you look at these financial markets and you look at the top 10 currency traders of the world, you have these bigger players, these bigger banks and institutions that control the majority of the market share. For example, JP Morgan control over 10.78% of the market share. Now, when these guys and their algorithms that they use to facilitate their trades, what I want you guys to realize is because they're trading so much money, they have to firstly manipulate the market in a way which allows them to physically fill their orders. Now, what do I mean? Look, if you don't believe me, you can look at all the articles where these guys have been fined for manipulating so many different markets. It goes on and on and on. There's tons of pages about this. But the question is, how do they do it? How are they going to fulfill their orders? Well, you have to look at it, right? If you come to the financial markets, and let's say you've got 1 million orders that you need to fulfill. These guys are not going to be able to fulfill all of their orders at one price point, because if you go to a price point, let's say, again, we just make up some random numbers, let's say £10, there's not always going to be 1 million orders available at £10 for them to buy or for them to sell. Because if you're buying the market, you need someone to sell it to you. If you're selling the market, you need someone to buy it off of you. So what these guys have to do is seek different price points to allow their orders to get filled. So for example, if we look at the market and let's say we've got £10, £9, £8, £7, £6, and £5, well, if you're going to buy something, what price would you prefer, right? Would you prefer £10 or 9, 8, 7, 6, 5? I'd prefer the cheaper price. So what these guys are going to do, right? They're going to come to the market, but you have to remember there's only going to be a certain amount of orders available at each price point. Let's say at £10, right? There may only be 100,000 orders available, right? Let's say at £9, there may only be 150,000 orders available, right? There may only be 200,000 orders available, 300,000, 400,000. Now, of course, as prices go lower, more and more people are going to be interested in buying the market. So what you've got to realize is the way supply and demand enters the market is through a very specific way. Because these bigger players and their algorithms, they can't, again, just come in, enter 1 million orders at once, because there's physically not enough capital, there's not enough liquidity to fill them. So they have to seek different prices and manipulate the market in a specific way, which I'm going to show you now. So what they're going to do is they're going to initially sell the market lower until they reach an area of demand. Now, again, if they've got, let's say, 1 million orders to fulfill and there's only 100,000 orders available, yeah, they get some orders filled, but you ain't going to get a big reaction from that. So what do they have to do? Seek price lower to get more orders filled. Seek price lower to get more orders filled. Seek price lower to get more orders filled until eventually they fill all of their orders available, and then you see the reaction manifest. Now, how can we actually know that? Well, here's the thing, right? We're not just trying to guess and do fabricated lines. We need to wait for hard, factual evidence that these institutions have been in the market. And what we can do to see that is look at our Wyckoff schematics. Now, when we look at Wyckoff, what you have to remember is that these are not chart patterns, okay? They're the manifestation of sellers of supply entering the market. Because what you've got to remember is the market's only going to do two things. It's either going to introduce supply, where sellers are going to come into the market, or it's going to introduce demand, where buyers are going to enter the market. Now, how does it physically do that? Through the Wyckoff schematics. So when you're going to look at your Wyckoff and you're understanding who's in control, look at your schematics first. Right? Now, when you're looking at schematics, don't try and label each different part. Don't try and say, oh, this is BC, AST, SOW, da 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 da. Now, of course, you have to understand the phases and the events, but to really simplify it for you, all you need to do is look at areas where buyers were turned to sellers. And if you can see the area where buy orders were turned to sellers, where the market does a three-step process, where it rallies, it pauses, then goes, a rally, a base, and a drop, that is a distribution. That is the market distributing and enter and sell orders. And what that will look like in terms of your structure, your higher highs, higher lows, higher highs, higher lows, is it will look like a manipulation of the highs followed by a break of structure to the downside. And now once you've seen your manifestation of buy orders being turned into sell orders, where the market is turned around and they've filled their orders as price has gone higher and higher, that's your distribution. And now once you've seen your distribution, what you can do is you can play the mitigation of that, allow the market to come back up to your desired area, and then obviously take your sell position, then continue the market lower. You see, we're not trying to guess and pinpoint all these different phases. I'm not trying to buy the sign of weakness and sell the UT and then sell the top of the UTAD. I'm waiting for the whole thing to complete. I'm waiting for the whole thing to validate. And then once it's validated, then I can start taking my entries. So that's what the distribution is. It's when buy orders are turned to sell orders. Now, once sellers are in control, what you can now see is more sell orders get turned to more sell orders through the process of redistribution, where you literally have sell orders turned to more sell orders. And again, in terms of your market structure and fulfilling of orders, they're going to rise price to fill at premium prices. Again, if you're selling something, would you rather sell at £10 or £11 or £12 or £13 or £14? Of course, you'd rather sell at the most expensive prices possible. So when you see the market drop, base, and then drop again, that's a redistribution of price. Then you can validate that by looking at your manipulation of your highs, followed by your break to downside, and now you can play the mitigation to sell lower. What we can see now is how buy orders enter the market through the process of accumulation. Now it's the same sort of concept, again, which I showed earlier, where they're filling their orders, they're getting those cheapest prices possible, but all an accumulation is a drop, a base, and a rally, where the market has sell orders turn into buy orders. And all you have to do is identify those areas and then say, okay, well, let me validate this. Do we see the market manipulate lows before breaking structure to the upside? And again, we're not trying to buy and catch a falling knife. We're waiting for this manifestation to occur. And once we've seen the manifestation, once we've seen the footprint, we can now take trades based off that. So once you've seen demand in control, you can now wait for more evidence of more buyers enter the market through reaccumulation, where you have buy orders turn into more buy orders through the process of doing what? Manipulating the lows, then breaking structure to the upside. And you'll typically find these in an uptrend. So all we're doing again is we're not trying to guess all these different random points. We're literally just waiting for these to occur, identifying the manipulation, waiting for the pullback, and then sending it higher. That's literally it, right? If you can't get a mitigation, you just wait for another schematic. That's it, you know? And let's look at a few examples, right? If we just pull up a clean chart, well, what can we see up here, right? Let's go and investigate. We can see who are turned into what? Buy orders turn into sell orders. So we can successfully say this is a distribution. Now again, how do we find the entries? Well, what we do is we wait for our manipulation of our highs, right? Highs manipulated, highs manipulated, and a break of structure to the downside. And then once we break structure, we can look to catch a mitigation, which again, I'm not going to go into precise entries today because that's a whole nother convo, but you can look to catch the mitigation and then target much lower, because what you have to remember is when you see these schematics print, they cost money to create, right? This 4-hour schematic is being created over 36 days. These things are not random, right? These things are very intentional because it costs a lot of money to move the market. So now look at effort versus result, right? When you see this schematic that's been printed for almost, over a month, 37 days, do you really think we're going to get a pip squeak move where the market's just going to drop 10 pips? No. Look at the substantial move that follows after this distribution, because all of that energy has been gone into creating that distribution. Now look, what else do we see? We can see evidence where sell orders are turned into more sell orders through the process of manipulating highs, then break into the downside. We redistribute. Now again, you don't have, these schematics are not chart patterns, it's a study of market behavior. So when you come to the market, start to identify, spotting these schematics. Where are your distributions? Where are your redistributions? Where are areas where buyers were turned to sellers, where sellers were turned to more sellers? So again, when it comes to spotting your accumulations, where are your areas where sellers are turned into buyers? Here, we have an accumulation. Do we see manipulation of lows? Yes. Market manipulates the lows and breaks towards the upside. Now we've got buyers in control. Again, look at the effort that goes into that. We don't see baby pipsqueak moves. We see the market create substantial movements from these schematics. Now, of course, there's always other stuff you can add, but you have to remember, for the most basic thing, look at your manipulations, right? What do we have here? What do we have here? The market manipulating lows and break into the upside. We have a reaccumulation. After we have that reaccumulation, the market absolutely goes crazy. So here's the thing, guys. When it comes to spotting your schematics, right, don't worry about trying to pinpoint every different phase and event, right? Does it help to understand every single phase and event? Yes. Is it necessary to understand every single phase and event? Not necessarily. What you have to first focus on is train your eye to get used to seeing the areas where sellers will turn to buyers for your accumulation, where buyers will turn to more buyers for your reaccumulation. Then, once buyers are in control, where are your areas where buy orders are being turned to sell orders? If buy orders are being turned to sell orders and the market's rallying, consolidating, during the consolidation it's manipulating your highs, then breaking to the downside, that's a distribution. From there, right, once supply is in control, it's more than likely you're going to see redistribution where the market turns more sell orders into more sell orders. Now, again, if you want to learn more about all this, guys, family, please don't be afraid to check out my YouTube channel. I've got tons of videos on these Wykoff schematics. But yeah, please don't be intimidated by Wykoff, man. Don't let it confuse you. Remember, it's designed to confuse you because it's so powerful. Right? Just go back, rewatch this video a few times. Sometimes you have to rewatch it again and again and again for it can click. Now, I'll be honest, when I first started trading Wykoff, was it easy? No, right? But when you can really begin to simplify it and look at the bigger picture rather than all the small details, you realize how much more simpler and how much more powerful this thing can be. Because think about it. Right, you can use Wykoff to validate and invalidate so many trades. Right? If you're in a bullish market where you're reaccumulating, why the hell would you be selling? Doesn't make sense, right? If you're in a bearish market, right? We go back to GBP USD, right? We're in a bearish market. Why the hell would we be trying to buy this? I mean, can you buy it? Oh, I mean, yeah, you could, right? But you have to ask yourself, is it worth it? Is it worth trying to catch these small pipsqueak buys when you got the market redistributing? Of course not. So what you guys need to do is start looking at who's in control, whether that's supply or demand, and looking at the manifestations of your schematics. Once you found your schematics, you know who's in control, then you can begin to create your strategy from there.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. All right, folks, so there we have it. A great breakdown there from Kieran. Now, before we wrap up, what's the best way for the traders to get hold of you?
Yeah, so everyone can check out my YouTube channel, youtube.com/master a coin, or they can check my Instagram, instagram.com /IK Davis.
Brilliant, guys. Well, look, what we'll do is we'll put a link to that below the show notes. It's below the video here. And we'll actually, you're going to get to hear Kieran's first interview, and there is another video on that page as well, but all those links are over there. Thank you for watching. Do remember, hit subscribe whilst you're there, hit like, click on that notifications bell, click all, and we'll see you in the next video.